All right, so today we're going to have a straightforward comparison between the TradingView footprint chart and a, say, more professional platform like ATAS here. In this case, we are going to compare, so the pricing, we will look at, well, let's look at our list here. We're comparing pricing, the ease of use, the practicality of each of these platforms. Then probably the most important part will be comparing the quality of the data, of the footprint, looking at the numbers, comparing the same candles, let's say this one to this one, and looking at the numbers here and which one is the most precise and correct. We will then be looking at the CVD. We're going to compare the CVD candle indicator from TradingView and ATAS. And then we will look at the order flow related indicators. So on TradingView, for example, you don't really get any new indicators. You have all of the classic indicators from TradingView, and when you get the footprint chart, there's not much new. But we will compare the indicators here that you get, like really order flow related indicators, such as the big trades indicator or the cluster search, stuff like that. And then we'll just have a conclusion, and you guys can figure it out for yourself. But comparing the pricing, comparing the quality of the data, which one will give you a better edge, essentially, because it's all about which one is getting you a better edge in the market in the end. So let's get right into it. Starting with the pricing. So for TradingView, to get the footprint chart, you need two things. First of all, you need to get a premium subscription. You won't get the footprint chart with the plus for 34 or the essential, okay? So on a monthly subscription, we're comparing here, it would be $69.95, so $70 per month. And to that, you would have to purchase the data, which is quite practical, by the way, on TradingView, is you don't need to get a separate data provider. They will sell you the data right there after you get your subscription here to the monthly premium. You can then get right away from TradingView your data for around $7 to $10, $15, depending on how much data you need. For me, I only trade NQ, so I think it's around $9, $7, let's call it $10 a month, right? If you're just trading NQ, I think you get also gold and ES for that price, but you have to check that out for yourself depending on what you trade. Now so the total would be, let's call it maybe $80, something like that, in that area. Now for ATAS, for a monthly subscription, you would pay the same, $69.95, so let's call it $70. And to that, you would have to add your Rhythmic subscription. Now this is where it gets a little bit more complicated, because you have two options. In my case, I get free Rhythmic IDs, so a free subscription, with my prop firm. So my prop firm is Bullinox, but there's plenty of prop firms that give you free Rhythmic IDs. I believe, so for me it's Bullinox, but there's also Lucid, there's also, I think, Apex, also there's plenty of them, so you'll have to do your research. So it's either $70 with free IDs, or if you buy it from a separate provider, so from Rhythmic, I believe you can get it for $20 or $30. I'm not sure, but in that price range for sure. So it's either $70 with free IDs from your prop, and I think a lot of you are prop firm traders, or it's $100, okay? So it's kind of difficult to really compare the pricing, but if we're going for the max, let's call it $100 on ATAS total to get the full footprint, right? And $80 on TradingView, okay? Again, depending on your circumstances, because technically you could get ATAS for just $70 and get your free Rhythmic. Now, comparing what the ease of use is our next step, the practicality. And here, for me, it's a no-brainer. TradingView is definitely the winner there, because all you need to do is you just open a new window on the internet, click on TradingView, and in 5 seconds, essentially, you're right there on the footprint chart, okay? And what I love about TradingView as well is that you can check it out from your phone, from your tablet, from your MacBook, the same, of course, from your PC, from your from your Windows computer. So it's just like so easy to access it. And I gotta say, that just being able to just check on your phone, open the app, and in 5 seconds, check out your footprint chart, I thought that was very practical. That's definitely a no-brainer. And to turn on ATAS or any other footprint chart platform, order flow platform, you need to open the app and then connect to the thing. And it takes around, I would say, 1 to 1.5 minutes from the moment you click and then connect and then get to the actual footprint chart. So I would say, yeah, at least a minute to actually get to it. This would take you, let's say, 10-15 seconds, right? So practicality, no brainer. As for the features, also the fact that we'll get into that in a minute, but the fact that the features, you go into the settings of your footprint chart here on TradingView, and these are the settings. That's all the settings you get, which, because you have a lot less options and a lot less features, but it makes everything easier. It's like, oh, do I want cluster or profile? Do I want delta or buy and sell? Ticks per row, you click it and you can, I don't want to change it right now because it's going to move the chart around, it's going to change the area. So, but way more practical in many ways. But now we're already touching to something is that, yes, this part is more practical, but you have like 1,000 less options, right? So it's more simple, but it's more practical, but just less information. Now here, if you look at the settings, you go into the footprint settings here, and yeah, there's a lot to be looking at here. And then you have all of your templates. We're not going to go into all of that stuff, but of course, it's going to take more time. It's going to be a bit more complicated on ATAS, but it's also because you have a lot more features. Okay, and I don't want to go too deep into the feature. I think now what's more interesting is to get into the data, because this is really the most important part now that we're going to be comparing right now. So let's look at the same candle here. We're going to look at a few candles now, but let's look at the same candle here. So first of all, there's something that needs to be said, and there is like no debate about it. TradingView says it themselves, is that TradingView has aggregated data, all right? So it is not as precise data, okay? They just recognize that when you have a platform like ATAS or whatever, Sierra charts, they're giving you true data. So that's not even a question about the data. Then the question will be a bit later, like, can you make the TradingView data work for yourself? Can you still have an edge with it? I believe you can, by the way, because we'll get into that later, but I used to use the TradingView footprint for many months, and I was doing great with it, okay? But let's compare the numbers because essentially is like, we know it's aggregated data, so less precise on TradingView, but the question is like, how different is it from true data, right? That's the question, So let's look at this candle here well, I think, before we look at the candles, I think it's interesting to look at this right here. Look at the cluster here. This is the volume, 627 volume, and you can see, I was surprised to see that we're comparing with this candle here, same candle. It's the same volume actually, 627, 617, 617, 503, 503. So I thought that was interesting. I didn't expect that actually a TradingView would have the proper volume on the candle. Now, where it gets more interesting and we start to see some big discrepancies here and some big differences is that you look at the delta on that candle, 447 positive delta, 617, 670, 165. The true data tells us that we have 167 positive delta, and here they're telling us there's 447. That is a huge difference. By the way, I can zoom in more here to make the numbers bigger. I do like that, which I can't do on TradingView, and that is not right. However, I move this. Of course, I can do this, and numbers become a bit bigger. But I do have an issue with this, and I always had an issue with this. Okay, just a little difference here. But that's a big problem, guys. 617, so we know they got the volume, the total volume of the candle, they got it right? 617 here as well. But then when it comes to the delta, of the candle, we have a huge discrepancy, 447 versus, 617, 165. So that's a big problem. If it was, 220 versus 165, or, like 150, 140, like, okay. But that is, that is triple the amount, right? That's a big problem. So we're going to compare other candles. Let's just go into this candle here, for example, at 820, 503 volume, 503 volume, delta minus 81, and here we got minus 503. Let's just look at the other ones, 93 versus 343, 165, 447. So that's a bit of an issue here that I have. Now let's look within the candles. So let's go back to the 815 candle here at 815. So at the bottom we got minus 47, minus 5, then 57, 57, 31. Here we have it's all positive delta when clearly we had some negative delta at the bottom here. By the way, we have the same amount of clusters, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. Of course, this is very important that I'm not having different amount of clusters per candle. But you can see here, we have huge difference, huge discrepancy in data. Plus 128 positive delta on the second cluster, we have minus 5. I mean, it's not even close. We're going to look at other candles. Here you have this huge negative delta on this whole candle, and look at it, it's not the same at all. It's not even close. Next candle, here we have, 5 clusters versus 4. But you look at the numbers, it's just, huge difference, not only in the numbers themselves, but look here, this is all negative delta at the bottom of that candle. Here we have minus 67 versus minus 58. Then we have positive delta here. So listen, we're not going to do 100 candles. We pretty much get the idea that this aggregated delta is, it's really far. I thought, maybe it could be somewhere in the ballpark, but it's actually really far from true data. It's not even close here. So that was a bit disappointing for me to realize that, because I always knew it was aggregated delta. And again, guys, the fact is I was making it work for myself. I was profitable using the TradingView chart. So whatever they're doing, they're getting something right, I gotta say, right? Whatever they're doing something right, because this aggregated data was working for me. It really was. But the fact is, it's far from real. It's far from correct. It's far from being precise. That's like, you can't deny that for sure. Yeah, I'm just having a quick look at this candle, minus 105, minus 89. Again, the numbers aren't even close. And minus 129 negative delta versus minus 333. It ain't right, okay? That's clear. Okay, we're done with that. We're done with that for sure. Now let's look at the CVD. So this is interesting because maybe I should get rid of the cluster statistic so we can focus. Give me a second, guys. Sorry. I'm going to get rid of the cluster statistic so we can focus on the CVD. And here as well, how do I do this again? I think that's it, right? Okay, there we go. Okay, so now we just have the CVD at the bottom. So here we can see that price is making essentially, same highs, right? Equal highs. And CVD is making a lower high. So that is what you would call exhaustion here. So even though we made equal highs, we had less buyers than we had here, okay? If you've watched my CVD divergence or CVD videos, you would know what this is. I think most of you are aware of what a CVD divergence is. Now, looking here at the true data, we have the opposite. We have slightly higher highs, actually, technically, but I think it's just wicks here at the top, so I would call that equal highs. And CVD is telling us actually the opposite, is that we have more buyers in this area right? So it's an absorption sort of CVD divergence. So it's telling us the opposite. It's telling us that we have more buyers in this area and price wasn't able to make any higher highs, okay? So while either way, it's two different types of divergences. Either way, you got a reaction from price. But if you know my style of trading, I always say that the most powerful type of divergence is this one, because we know that I'm always looking for absorption, right? And we know that with absorption, we have some strong sell limit orders in that area, which is not allowing the bias to break above, okay? So in this case, well, again, the CVD is more precise. But again, guys, you know, if you watch my CVD videos, I always made the TradingView CVD. I was able to make it work for myself. I did have an edge there, but clearly the CVD is more precise on TradingView, and it's giving you way different information. Now, looking at the candles themselves, zoom into the candles. They're pretty similar in size here. Then at 9:10 a.m. we have this big one. 9:10 we have this big candle. So in terms of the size of the candle, so what happened here? The candles are the same size, right? If you compare like this one to this one, 1, 2, 3, 1, 2, 3, very similar looking candles. But yeah, okay, it's in this area that there's a discrepancy. These candles are going big here. Yeah, it's in this area. So CVD, let's look at some other examples. I think we should. Here, what do we have? Oh, so this is interesting because they got the same thing. I checked that out earlier. And here in this case, so price is making higher highs here, and CVD is making lower highs. And in the same area, we have price making higher highs and CVD making lower highs. So we're getting some lower lows, sorry guys, lower lows, obviously. So we're getting more sellers in this area, right? And more sellers here, and yet price is not going down. So what do we have? We have a CVD divergence, we have absorption. So both the TradingView CVD and the ATAS CVD is telling us that there is strong sellers failing to drive price to the downside. We have a nice reaction from there, by the way. So that's interesting. What did we have here? Let's compare. I think it's very interesting to compare CVD here. Here, equal highs, lower highs, and here, equal highs, lower highs, although the highs are much lower here than here. But they're showing the same idea. Let's move on to another low. It's interesting to compare these lows here. Where are we here? So here there's a convergence, I would say pretty much a convergence. And looking at this low here. Well, it's not the same, obviously. Oh, this is where it's okay. This gave you a beautiful signal on ATAS. Look at this from this low to this low, right? And from this low to this low, we have a strong divergence here, and then we had this beautiful move to the upside. And here we didn't have a divergence. It went higher here and it went higher here. So by the way, you know, this is making me realize I don't look at CVD that much. If you've been following, by the way, my Telegram group and the trades that I share there, sorry, I don't really look at CVD, the CVD anymore so much. But this is making me think I should get back into it because, you know, we're looking at some, I mean, it's definitely an interesting confluence to be looking at. Okay, this is just a digression here. Let's look at this high and then we'll be done with CVD. So here we have equal highs on the TradingView CVD, higher highs on price. And here, what do we have? Higher high on price and higher high on CVD. So there is a bit more of a dive. This one would show you exhaustion here, essentially. So technically, you would have more of a signal to short this. And here you just had a convergence. Jesus. Sorry, guys. But essentially, you wouldn't have a signal to short here, but it's true data. And the true data is telling you like there's a high on price and there's a high on CVD. Listen, I could do that for hours, to be honest, because I just love this and it's fascinating. And I'll probably keep on doing it after the video. Let's do one last one. This is converging here. And here. Yeah, by the way, here you had a divergence. So here you don't, right? And here you do. Which, by the way, if you long this, that would have been a loss, right? You had sellers, more sellers here. Then here, if you wanted to long this based on that divergence, you would have taken a loss. But of course, we don't trade just based on CVD divergences. We need to be at strong levels of confluence, right? Okay, so CVD, I mean, is more precise. It's the same as the data within the candles. It's just more precise. We know that on a platform like ATAS. So I think, did we look at everything? Oh, indicators. So this, obviously, again, with TradingView, you don't get any extra, footprint related indicators. You just always have the, the basic CVD and whatever indicators they have on TradingView. But here, what you have on footprint, you get some professional indicators like the big trades, right? You can see that here there was one trader or or trader or institution or whatever, it doesn't matter, that literally one actor bought 110 contracts up here. This is, pretty strong indicator, and you can, you can go to settings. You can also modify that indicator if you want to see minimum volume. If you just want to see the trades that are above 20 contracts, apply. Now you get more of these bubbles here because you also get, if you had like 30, 20, right? And you can also make it so that it only shows you trades that are above 100 contracts. I don't think I did that properly. 100, okay. Wait a second, oh, I did something wrong, my bad, guys. So apply, and then you would only see the trades that are above 100, like this one here, okay? And there was one here. I don't know why the bubbles are so small. There's something wrong that I would need to fix something in there, but okay, you get it, and that's pretty cool. Obviously, that's a pretty strong indicator, and again, it's true data. And you have also the cluster search, and yeah, I mean, you have a lot of them, right? Volume and order flow, yeah, I should have started with that. Volume and order flow specific indicators, right? And here you have absorption indicators, adaptive I mean, you have a bunch of them. Obviously, I'm not going to go into them. I don't use most of them. You have open interest. That's something that I don't use, but that a lot of traders use. That's quite a strong indicator to be looking at. I mean, you have a lot of stuff here. Unfinished auctions, pretty powerful. VWAP, of course. Like VWAP is something that I use in my, every day. I'm looking at it. VWAP and previous day VWAP. Here you get the VWAP also, and it's pretty much the same actually as the ATAS VWAP. Pretty much the same in my experience. Okay, but you have a bunch of stuff. Oh, wait a second. There's something that I wanted to compare that's very important, actually. If you're still watching this video, well, good for you. But let's look at, that's a very important one, fixed range volume profile, or actually, no, my bad, session volume profile. Let's look at our value area highs and value area lows. Like, where are they drawing these? Like, okay, I'd have to zoom out here a lot. So by the way, this is the cluster. Again, you can modify it in the settings, but it's just giving you, and it can be rectangles, or it can be ellipse, or circles, or whatever. It's just showing you where there was high amounts of volume in which area of the candle. Again, a very good indicator that I have a look at every once in a while, but I don't like to have too much information on my chart, but a lot of people like to look at that, and for good reason. Okay, but let's get rid of that for now, because I want to look at our volume profile here. I think that's very important. So get rid of this, this. We're going to open the profile here, and let's look at the 16th of April, right here. So the value area low was at 26,384. This is very important. The value area low was at 26,386.84. And here again, we're on the 16, yeah, right. And here, same area. Okay, we're good. 26,382. And this is same area, so that's fine. POC 26,447, 26,448, 26,504, 26,502. Okay, it's the same, guys. So that's cool. Honestly, that's very important. And I thought they got that wrong. Let me just check another one, because that's just one example. Value area high, so we're on the 15th of April, 26 to 12, 26 to 10, 26, 97, 67. 26. Okay, we're good. I think we're good in that department, and that's very important. Now, okay, let's look at one last thing, is the actual volume here. I want to see. Very similar. Very similar. Yeah, definitely. I mean, it's the same, honestly. It's pretty much the same. Okay, so for that, good job, TradingView, because they definitely got that right. And this is so important for your areas of confluence, for technical analysis. So I'm kind of happy for them, because I mean, let's be honest, guys. TradingView is getting beat like by far in that comparison, and I expected that. Like, of course, now I have a bias toward ATAS because I've been using it for a while now, and I mean, it's a great platform, obviously. Listen, so let me get to the conclusion. And everything I'm talking about here, I already knew, obviously. I'm discovering some stuff, as you can tell, but most of the stuff I was very aware of. And this is my conclusion that I already had pretty much, is like, can you have an edge using TradingView? Well, I've told you very openly, yes, you can. And I mean, it had been working very well for me. Has it been working for me better with ATAS? I would say yes. I would have to compare exactly my statistics from 6 months ago to ATAS nowadays. But do you have an edge with TradingView? Can you have it? Absolutely, no doubt about that. Is it as good? I mean, the data is less good, so what do you expect, what do you expect? Just looking at the CVD, looking at the numbers, it's pretty obvious that your edge should be less good. But in the end, like, you can have a great edge even with not good data. It sounds ridiculous, but I mean, you can have an edge without even using the footprint chart. So, for me, edge, it's about, in the end, trading is like, do you make it work for you or not, for yourself or not? That's a more kind of like, not philosophical, but kind of general question about trading. I mean, you can be profitable having concepts that are all wrong, like ICT concepts or stuff like that. Like, you can be profitable using that, even if you're completely paranoid about the markets and you think that there's one algorithm controlling all of the markets and that everything is manipulation. Technically, you can be profitable being completely wrong about your idea of the market. So can you be profitable using the TradingView footprint? Well, yeah, you can. I was. So not an issue there. Listen, the real issue, and this is the ultimate conclusion for me, is like, is it worth it? Well, technically, we've figured out that it's the same price essentially, right? And let's say the maximum, if you had to really pay full price for your rhythmic IDs on ATAS, it would cost you $100. And here it's $80, $85 with the data. So there is a difference in price, 10, 15, well, 10, 15, 20% difference in price. So it's not nothing. But for the content that you get, I think it is very well worth it. I would tell you in what circumstance I would have gone for TradingView. I mean, first of all, to be honest, I can't afford to pay, what I'm paying here. By the way, I'm paying just $70 because I get my Rhythmic for free, right? So for the same price, there is no question. I think this video is very obvious. You would have to go for a professional platform. Again, in my case, it's ATAS, but it can be whatever other platform you want to use. So for the same price, there's no question that you would take a professional platform. Now, if you're paying, let's say the max price here, 100 with the data, $100, right? Versus 80, $85, I would still say that it's better to get the professional platform. I would have used, listen, if I didn't have, a lot of a big budget, right? I would have, TradingView for what you're getting should be $40. For $40, not even 50, honestly, for $40 with aggregated data and less precise data, yeah, it would be worth it. Like I would have been, I would go for it. If I didn't have a big budget and it was $40, I would say that's a very fair price for the quality of the data. But making people pay $70, pretty much the same price with the data, I mean, I'm not going to compare the price again. No, like, I'm sorry, but no, not at all. It's not worth it at all. I mean, the difference in data is huge. So yes, you can have an edge for sure, but you're having an edge for a very similar price range for something that gives you true data in comparison. Again, $40 I would say is a fair price for this, but $70 is ridiculous. So that honestly, like when I realized how different the data was and how similar the price was, I was kind of pissed that TradingView would have the balls, I'm sorry to say, to actually make it that expensive. So that's my conclusion, guys. If you have some criticism, if you have some positive comments, that's nice. But if you also, I'm sure there's some stuff that I could have got into, I could have been more precise. I mean, I don't know. If you have some questions also, just go ahead in the comments as usual. That's it for me today. I hope this was useful for you guys.